DAA reports €297.7 million profit amid passenger limits. In an impressive turn of events, DAA, the operator of Dublin and Cork airports, has reported a staggering pre-tax profit of €297.7 million for 2024, marking a 9% increase in revenue to reach €1.1 billion. This remarkable achievement comes even as the company navigates the challenges posed by passenger cap limitations. Last year, Dublin Airport welcomed an additional 1.1 million passengers, bringing the total to a whopping 34.65 million across 244,000 flights. This figure significantly exceeds the airport's annual passenger cap of 32 million. DAA's chief executive, Kenny Jacobs, expressed optimism, stating, "We expect Dublin to surpass 36 million passengers this year, based on the demand from airlines for more slots." Following a more than 40% surge in profits compared to 2023, DAA is set to pay a dividend of €68 million to the state. However, operating costs also saw a rise of 4%, totaling €524 million. Jacobs proudly declared, "This is our best ever year, on the back of our best ever year. We're making passengers and shoppers happier, and they're spending more money with us." The aeronautical sector contributed €343 million to the total revenue, while nearly a quarter of the income came from retail and catering concessions. Jacobs likened DAA to a retail giant, saying, "We are the Tesco of airports. We see ourselves as retailers. Travel is straightforward, there will always be planes and runways, but our terminals are essentially shopping malls." International operations, including airport retail in Europe and the Middle East, generated €261 million in revenue. Overall, Dublin and Cork airports together welcomed 37,716,884 passengers last year, reflecting a 3.8% increase as travel numbers stabilized post-pandemic. Cork Airport, in particular, experienced a robust 9.7% growth, surpassing the 3 million passenger mark. However, DAA chairman Basil Gogan voiced concerns about the complicated, burdensome, and slow planning system that hampers the airport's ability to invest and enhance connectivity. He pointed out that the outdated 32 million terminal passenger cap, established in 2007, is based on long-resolved concerns about local traffic infrastructure, an issue beyond DAA's control. Jacobs echoed these frustrations, describing the planning process as dog-slow, particularly for us here in Fingal, and that's a pain in the backside. He warned that tariffs, costs, economic challenges, and slow planning headwinds threaten Irish tourism and exports, noting a softening demand for long-haul flights and retail spending from U.S. travelers. The ongoing uncertainty has led to Ireland being the only top 20 European country to experience a decline in scheduled air travel capacity in Q1 2025. In terms of capital investment, DAA recorded €223 million in its airports last year, while net debt decreased by 16% to €685 million, a result of borrowing to cover pandemic-related losses. The company's international division, which manages several airports including Jeddah Airport and Red Sea International in Saudi Arabia, handled an impressive 49.2 million passengers in 2024.